In this video, I am going to be breaking down why credit stacking doesn't work and why I see so many people fail from all the clients that we've worked with that have tried this method in their own business, and what you can do in your own business if you are trying to get access to more capital so that you can continue to scale this year. Credit stacking is the process of submitting multiple credit card applications in a specific order with multiple banks in order to access large amounts of unsecured credit. So here's a quick example for you. Let's say that you apply at Bank A for 2 credit cards, you apply for Bank B for 2 credit cards, and then you apply to Bank C for 2 credit cards for a total of 6 credit cards. Now, taking that a step further, let's say that each credit card that you get approved for is $15,000. So that's $30K at Bank A, $30K at Bank B, and $30K at Bank C. We're now upwards of right around $90,000 in unsecured capital. But wait, it gets better. If you've done this process correctly, and if you've staggered all of the hard inquiries, which if you have no idea what a hard inquiry is, that just means that you give a creditor authorization for them to be able to look at your personal credit, which in this case, since you're personally guaranteeing it, that's the method you're going to be doing. When that hard inquiry hits, again, if you've done it right, you're going to have 1 hard inquiry for TransUnion, 1 hard inquiry for Experian, and 1 hard inquiry for Equifax, which means you have a hard inquiry, just 1, per each credit bureau. That's the ideal way that most people envision it in their minds. Sounds simple, but that's not what ends up happening in most instances. The first thing that I see entrepreneurs do all the time is they're applying for the right stuff in the wrong order. Let me give you an example. We had a client who, before coming to us, they were trying to get access to $120,000 worth of working capital. And so they kept trying to apply for business lines of credit at their local credit union. The issue that they had is that it was the right product, it was in the wrong order, meaning they hadn't had enough business just yet or business credit built up just yet in their business to justify getting that business line of credit. So we recommended, hey, get access to at least 3 revolving business credit cards. And then once you've used those for at least 90 to about 120 days, and this is going to vary by business and how much capital you're looking to get, then go back into that credit union and apply for that business line of credit. Lo and behold, after doing that, they were able to get approved for that line, unlocking the 4th line. Again, it was the right thing at the wrong time. Second issue that I see on why credit stacking fails is the business owner has a thin file. And so you can have a business generating $500,000. You've been in business for 4 years. You have an aged corp, you have an aged LLC, which means it's over 2 years old. You can apply for flat out just something as simple as a business credit card, not even a line of credit where they're most likely going to ask you for financials. You apply for something as simple as a business credit card, and all of a sudden you get denied. Now, you're probably thinking, wait a minute, my business is set up right. I'm generating a net positive revenue. And so what's happening is the bank is looking at how the business owner has managed their own finances up to this point. And so if you're in that place where you're constantly submitting applications, you may want to take a look at your personal credit score, because your personal credit score is going to be the best gauge, especially when starting out, that a business is going to have of how they're going to mitigate the risk. Meaning, are you someone that's going to possibly default in the future, even if you're trying to secure the set through your own business, which is why you, as the business owner, you want to work on properly structuring out your personal credit profile. Don't take a look at your Credit Karma. Don't take a look at your banking app. Take a look at your FICO 8 score, because that's the exact model that banks are going to look at. So I'll give you a quick rundown. You want to have less than 3 hard inquiries for each of the credit bureaus over the last 60 to 90 days. You want to have at least 5 accounts, again, on the personal side, with at least 4 of those accounts being revolving accounts, actual credit cards from a bank, not store cards. At least 1 of those accounts, I would say, especially if you're really trying to take it to the next level, at least 1 to 2 of those accounts, you want them to be installment loans. So this can be a mortgage. This can be an auto loan. You can even get away with a personal loan as well. And then you want the total utilization that you've had up to this point to be less than 20%. At the same time last year, I would have said 30%, but banks since then have been tightening up. So I'm going to say less than 20%. The closer you can get it to 0, the better. And then lastly, you don't want to have any late payments in the last 24 months. Now, if that sounds like it's a lot of work, well, guess what? Running a business is a lot of work. And so this is one of those things that you have to take care of so that you can enjoy the benefits of it later. So eat the frog, bite the bullet, get your credit taken care of, and you're gonna see how many doors are gonna open up for you on the back end as you start submitting these applications. The third mistake that we see is trying to fund a business that's improperly set up. So I'll define for you an improper setup. If you have a business that you have an LLC for and you have no idea what the EIN is, that's an improper setup because you need the EIN in order for you to actually apply for these business trade lines. If you have a business and let's say you are marking it down like it's in the consulting space, but you are in the trucking industry, that's improperly classified. That's also going to get you flagged, especially with how banks are starting to underwrite going into the new year and the new systems that they're using. And so your business and the way that it's set up has to tell a story. This means that you are classified in the right business, you have the right subcategory, and you have the right trade. In English, Irv. This means that if I am in business management, I do consulting, and let's say I do business consulting for small entrepreneurs who are looking to scale their business with funding, which is ultimately what we do. I was able to properly encapsulate that on a business credit application. Now, there's 2 times that you want to do this. You want to be able to do that on a business credit application, and you also want to be able to do that when you are speaking to a business banker. There's nothing that's going to turn off the bank more or make them weary of you when they ask you, okay, so what do you do for a living? Or what's your business involved in? Or how does your business generate revenue? And you're oohing and you're umming and you're kind of like at a loss for words. And so do yourself a favor before you even walk into a bank and before you try to credit stack your way into a multiple 6-figure round and you start inching that up into a 7-figure round, you want to be very careful on what you're putting on applications because banks are taking that information and they can kind of like cross-pollinate. So if you had maybe a business credit application where you put, oh, I'm an LLC, and then all of a sudden on another business credit application, you put, oh no, I'm an S-Corp. And then all of a sudden on another business application, you put a different classification code from what you put in the first 2. That's gonna raise a red flag because the 3 systems that you wanna pay attention to is going to be LexisNexis, it's going to be early warning system, and then you have the SBFE, which is a small business financial exchange. All of these systems are going to communicate to each other, even if they're communicating to each other indirectly because all of the information is getting pulled from the same databases. And so the minute that information doesn't start to line up with the story that you told Bank A is different from the story that you told Bank C, which is different from what you told Bank C, that's when you start getting what I call a sea of red across the board, which is automatic denials. You don't want that. You want to avoid that at all costs, which is why I'm giving you this information. Which leads me to my next 2 points that I'm going to bundle up together. You're applying to too many accounts too quickly, and then you're applying for too many credit lines too quickly as well. One of the biggest mistakes I often see is someone opens up, or at least attempts to open up, a business account. Let's say I'll use Bank A, not to name any banks. You go to Bank A and you apply for a, let's say, business checking account. And then all of a sudden, as soon as you leave, you decide to open up for 3 business credit cards with that bank. You haven't properly built up a partnership with that bank. Now, some banks you don't necessarily need, especially if maybe they're smaller banks or maybe they're banks that aren't as strict with you living inside of their geographic location. They may not care as much if you apply for a credit line off the bat, like as soon as you open an account. But some banks do, especially the bigger banks. They want to see some funds deposited into the account. They want to see you using the account for at least 30 days, 60 days, 90 days. They're watching your balances. They're watching your spending habits. They're watching you, not just as a consumer, but they're also watching you as a business owner. And so when you're making those deposits, when you're making those transactions, you want to think to yourself, everything that I'm doing, they're obviously looking at. And so how can I position myself in a way that's going to want them to do business with me? Meaning when I go to apply for a credit line, it's going to increase my approval odds. So I typically recommend my clients, you want to have at least 3 to 5K minimum inside of an account, especially if it's one of the bigger banks in your region. As soon as you open it up, you never want that account to go under $500. And if the limit is higher, say the limit is $1,000 before they start charging you penalties, you never want the amount inside of that bank account to go below the threshold that's going to cause them to issue you a fine, or is going to cause them to issue you some type of fee, is really what I should say. And so you want to pay attention to those numbers. And then you also want to look at the transactions that you're running through that account, ensuring that all of the transactions that you're doing are related to the business that you are involved in. The last thing you want is you have a Netflix charge that all of a sudden hits your business account. That looks awful. If you are in the construction space and you're maybe gathering roofing material, drywall material, paint, have all of that running through that business account, which then takes us into our final point. Be careful that you're not using dated or mismatched information. Here's what that means. Let's say you recently got married and your driver's license says your new name, but your social still has your old name. The bank that you're going to still has your own name. Your personal credit profile still has your own name, because remember, you're personally guaranteeing debts on behalf of the business. That can trigger an automatic denial because there's a mismatch inside of the database. And so before you go out and you start applying, you want to have one name, one address on the personal and on the business side, one name for you, the business owner, one name for everyone inside of your business, because this can also raise a red flag if you have multiple partners inside of an entity. And so making sure that all that information matches up, is up to date, and then going in and opening the account, and then going in and applying for the business credit line, and then going in and applying for the business vehicle loan. Something as small as missing the junior or the senior inside of a name is enough for a bank to turn an application down altogether. And so you want to take a new license or passport with you to the bank and update this across the board, because the last thing you want is, again, to get denied for something as petty as mismatched information or dated info altogether. So there you have it. Those are some of the key things that I noticed from all the clients that we worked with on why they're getting denied whenever they try doing a credit stacking, whether it's just a full-blown business line of credit stack or a full-blown business credit card stack. For the most part, this is what we're seeing. And so I don't want you to be one of those people. I want you to be able to go out, fund your business, and get access to more capital so that we can continue to make the world a better place, because I just flat out believe entrepreneurs make the world a better place. So if you found value in this content, consider hitting the subscribe button down below. Don't forget that anytime we're not posting on here, we're posting over on the Insight with Irv channel, which is our podcast. So if you like what we have going on over here, you'll love what we have going on over there. Once again, I appreciate you guys checking me out. Until next time, everyone, I will see you in the next video.